What's poppin', bro? So I'm gonna do a video on a full chart breakdown. And before I do the full chart breakdown, you have to understand that everything that I do and what I'm gonna say doesn't make a difference in what type of trader you are. So if you are a scalper, day trader, intraday, swing trader, doesn't matter. What matters is you have to take the concept of what I'm about to say and apply it to what you do as a trader. It really doesn't matter about the time frames, right? Everything is the same on every single time frame. Price action is the same regardless. Price action is price action no matter what time frame you're on. The 1 minute, daily, monthly, weekly, 1 hour, it literally doesn't matter. It's the exact same thing. And what I mean by that is you're always going to see higher highs, higher lows. I mean higher highs and higher lows, right? You're always going to see lower lows and lower highs. It doesn't matter what time frame you're on. And with that, you're going to see breaks of structure. Okay, you're going to see price break down below. You're going to see price retest. You're going to see things like that. It doesn't matter what time frame you're on. It's going to happen all the time regardless. So that's the thing that you have to understand. Now, the difference in the time frames is the higher you go, the more impactful the time frame is, if that's the right word, the more significance the candles have, right? The daily, you see right here, we had 1, 2, 3 rejections on this high, okay? That means for, let's see how long. That means for a whole month, price rejected this previous high. That's very significant. That's almost guaranteed that we're going to go down. But if that was on a 1 hour, that's not guaranteed. If that was on a 1 minute, that's not guaranteed. It's a lot different than the other time frames, and that's the only difference besides the time frames. So everything that I'm saying, you don't have to go specifically like, oh, he's doing daily 4 hour, 1 hour, I have to do that. Whatever time frame you're trading on or whatever style you already have, just take that concept and apply it to what you're already doing. And for instance, I've been getting into scalping a lot. I've been trading on the 1 minute and the 1 minute only. I haven't been going to higher time frames. I've been trying out scalping to see what it's like. And I'll go and show you. Everything's the same. Everything's the same. It's a lot more fast paced, but everything's the same. You can see, right, multiple rejections. You see price, started to really chop out, get really, really slow, and then started to reject the same level. And then we dropped. And then we started creating lower lows, lower highs, lower lows, lower highs, and then kept going. You can see how price rejected this entire area multiple times. What does that tell you? We had a break of structure. We had price super strong push, break, retest. The same exact things that you see on the higher time frames are the same exact things that happen on every single time frame. So before I even show you how I do a chart breakdown from top to bottom, it doesn't really matter. You just have to get the concept that it applies to every single time frame. So I'll do the scalping breakdown, and then I'll do what I was doing before, the intraday trading breakdown. Just to do both. It's probably going to be the exact same concept. The strategy doesn't change. The only thing that changes is the time frame. So when I was doing this, I would go to the daily and I would just look at price, right? The daily has a lot more significance in when you're doing stuff, when you're looking at price action. So I would look at this and I'd be like, okay, well, look at the difference in price from, how can I make that not happen? Let's from here, look at the difference here, right? Look at the difference in these pushes, and then look when price starts to chop a little bit right here, and then look how price starts to reject multiple times. So right off of that right there, I'm like, okay, well, eventually we're probably going to sell, okay? And then we had this big drop, and then we broke and retested this big daily level, right? So let's rewind it back. Let's rewind it back to here, okay? So we can see we had really, really strong pushes, and then we can see the difference in this. We can see the difference in this. We can see over here, we can see how price starts to act a little bit different, right? So you have to pay attention to that. And this is on the daily, so it's a bit different. It's a bit more significant of what's really happening. So then I would go down to the 4 and I would see, I wouldn't look for anything in particular. I would just look at and see if there's anything significant that I could look at. So if I was looking at this, I'd say, okay, well, obviously on a daily, we see that we have this previous high right here that has this huge daily rejection right here. We have this level right here that's been rejected multiple times on the daily. And then what I would do is I would say, okay, well, what I would like to see is just a simple break and retest out of this level. It's nothing crazy. You would just be patient and just wait for it to happen, okay? And then usually I would get my entries off of the 1 hour, and I would do something like that. And then I would probably wait for a more significant area to enter. I'd wait for price to play out a little bit more. I mean, obviously you could sell resistance. I usually don't do that. I just do breaks and retests. But something like this, price rejection, 2, 3, 4 times it decided to reject again, okay? And then we had a breakout. And then on the 1 hour, you can see, okay, well, that's kind of a level, right? So now we can take a break and a retest setup. We can sell right there, and then our stop loss could be above, and then we can take it to wherever we feel like we possibly could take it to, right? And then we let it play out. Let's go to the 4. And then it plays out, right? Nothing crazy, but the whole idea of this trade started from the fact of how the daily was starting to slow down and how we were starting to refuse to go to higher highs. We were starting to reject this previous level. We had multiple rejections on the daily. We looked at it on the 4. We said, okay, well, this is the next level that we could probably see, but, we got it right there on the 1 hour. Price rejected it multiple times, and then we also had another opportunity right here, and then we might get another opportunity right here, right? The only thing that I look for is breaks and retest of horizontal levels. That's it. That's the entire strategy, is just we're looking for price to break out right here, bang, 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 and that's it. That's the entire strategy. Now, it was top-down analysis. It started from the daily, went to the 4, and then the 1. The 4 didn't have really any significance, to be honest, in this particular trade. It just gives you an in-between perspective from the daily and the 4 hour of what price looks like and what it's really doing. Because going from the daily to the 1 can kind of be confusing. But it played out. It worked perfectly, right? Rejected, broke the retested level, played out beautifully, and that was it, right? Could have taken it, could have had it all the way to a 1 to 5, probably even farther trade if you held, or you could have just taken it to this previous level for a 1 to 2, 1 to 3. Very easy, right? Now, on the 1 minute, I've only been trading AUD USD. Now, I don't know what it is about scalping, but it seems a lot easier for some reason. For some reason, it's just so much easier for me to trade like this, and I don't lose. I have a very high win rate with this. I'm winning probably about 70% of trades for whatever reason. When I was intraday trading, I wasn't winning 70%. I don't know why or what's different, but you can see everything's the exact same. If you go here, okay, well, what does this tell you right here? Look at this big level. Okay, well, what's going on right here? What was it? Look how prices rejected this level multiple times. Okay, all right. What is that going to tell you? Price had a big drop, then a big push, and still rejected it. Came down, had a big strong push, and now we're downtrending, right? I mean, basic price action. You don't need to go and have the 5 minute or the 1 minute or the 15 that tell you what's going on, like as in having those time frames be like your 4 hour and your daily. You can just look on the 1 minute. And now look at this. Look how we have these breaks and retests. Look at how we have it right here. We have it right here. Have it right there. Okay, and then look how we have the same things as what we would have on the 1 hour and the 4 hour retracements. Okay, these choppy, weak retracements where price really isn't going anywhere. And then we restart the cycle and start doing it all over again. The difference with scalping to intraday trading is that it happens a lot faster, and you're not going to just have alerts set to look at it, whenever it happens. You kind of just have to be there and be present to make the money. But the concept is what I'm trying to get through, is the concept is the exact same thing, where you don't have to you want to take what I said about the other time frames and apply it to this, where price action is going to be the same on every single time frame. It doesn't really matter. You see the rejections on resistance. You see the breaks on the retest. You see the breaks of structure. You see the long wick rejections. You see everything is the exact same. It's just sometimes the candles look a little different. It's a different time frame, and sometimes it happens really fast. Sometimes it happens really slow. Doesn't really matter, but it's still the same concept. So that's how I do top-down analysis on any pair. It's like if I go on scalping and I'm like, okay, well, I'm going to trade from 10 p.m. to 12 p.m. or from 5 p.m. to 7 p.m. or whatever you trade, you're going to go on and you're going to say, okay, well, price is looking like this right now, and I'm going to, wait for this setup, right? You can see, okay, well, this is happening right now, and where's the thing at? You can be like, okay, well, you could look at it and be like, okay, well, this is happening right now. Look how price is getting really, really weak. It's, it has divergence. It's looking like it's has divergence right here. It's looking like it might turn around. We had a push down, and then we had multiple rejections. 1, 2, 3, 4, all around or 5, all around the same level. And then price pushed, break, retest, push down. And now it looks like we're really going to turn over. And we have this entire level right here that we could see rejected, right? Okay, let's see price go into there and reject that. We can take our TP wherever you feel like you can take your TP. And then price goes right in that area and rejects, and then bang, just like that. So that could be your analysis for the whole thing. You could incorporate other time frames to do that, but I don't know if it's necessary. And then the same thing for the 1 hour. You could incorporate other time frames. I don't know if it's necessary. But when I was intraday trading, I always did it like how I showed before with the daily, the 4 hour, the 1 hour. But that's how I did top-down analysis. That's how I've been scalping. But the main thing I'm trying to get across is that it doesn't matter what I do. It doesn't matter how I trade. Everything that I teach, you just can incorporate some of it, all of it, none of it, into your own trading strategy. So take my top-down analysis, try it out for yourself. Go time frame to time frame if you are a scalper or a swing trader or intraday trader. Take that and understand that you do not have to change what you're doing that's already working. Just take little tips from me, from everybody you learn, and incorporate it into your own thing, and you're going to see a lot of success, right? Take the right things, and if you do take the wrong things, then eventually just let them go. So I hope that helps. I mean, top-down analysis is very simple when you do a very simple strategy like price action. It's very, very easy. You look at very simple shit, man. I mean, there's not much that goes into it. You just look at this and you're like, okay, well, price created a head and shoulders. We're starting to reject multiple times. I think if you can probably go down, and then you start going down to the 4 hour, the 1 hour to try and get more intricate entries. Maybe not intricate's the word, just better entries. The daily is going to give you that overall perspective of what you think is going to happen, and then you go down to the time frames and try and get better entries. So that's it, man. OFX out.